ITC surges over 3%, now up around 1.5% to a record high. The government leaves tobacco taxes unchanged in the union budget. Brokerage firms Jefferies and Macquarie bullish on the stock.
Bajaj Finance dips nearly 2% after its net interest margin declines and asset quality deteriorates in the first quarter.
United Spirits climbs more than 5% after delivering a strong set of numbers. Premiumization, cost control and contained input costs boost margins.
ICICI Pru zooms more than 5.5% as net profit rises 9% on a year-on-year basis. The retail APE also comes in ahead of estimates.
Borosil Renewables up for the second day running. Solar glass producer company zooms after the government's announcement of 10% basic customs duty on imports of solar glass.
Hello and welcome to Chartbusters. I'm National D'Souza. Join me as always is Mangalam Malu. As we speak, the Nifty is down close to around 50 points yesterday. The bulls took it in its stride that long-term as well as short-term capital gains on equities were tweaked. Today as well, it's par for the course that the markets are holding with a bit of a cut. The good news, though, is that the broader markets have bounced back and the breadth of the market is firmly in favor of a number of stocks advancing and the mid-cap and the small-cap indices, all of them trading well in the green. Well, Mangalam, someone had to tell you that, the election outcome would not be as per plan. That is, what exit polls had indicated a complete majority for the BJP. And they would have told you that, in fact, you're going to see a tweak in the equity taxation. And you'll say that the market still is near record highs. You would have said you're bluffing, but that's the way it's panned out.
That's the way it's panned out. That's the cult of the equity market, and that's the resilience that we've seen, the kind of flows that have been coming in from domestic investors in our market itself, and that's kept, the story higher despite what one would perceive as negatives for the market from a market standpoint itself. Though a lot of stocks are spiking as we speak. LIC, for instance, up around 4%. We are seeing some traction in names like Anantraj, which is up around 3.5%. Liberty Shoes is another one. Footwear industries have been seeing a bit of an uptick over the last couple of trading sessions. BSE itself is up about 6%, and Ethos, that's the one that should come up for you, up around 10%. Long-term capital gains tax, short-term capital gain tax on all sorts of investments. But if you're buying a Rolex, the returns on the Rolex over the last 4 or 5 years have been actually higher than the markets without any tax if you're reselling that product itself. So we'll keep an eye out on Ethos as well. That stock up nearly 10%. And another one that actually stands out is Anthony Waste Handling. It's up nearly 35% in this week itself. The first 3 trading sessions of this week. Remember, Anthony Waste Handling, we had the management joining us on the show last week. They spoke about 20-25% revenue CAGR going forward. At the same time, the kind of order book that they have, over 8,300 crores. So all of that doing well for Anthony Waste Handling. Take a short, in fact, we have with us Sony Patnaik of JM Financial Services joining in with a quick technical check on the market. Sony, seems like mid-caps continuing to do well even as the large caps see some bit of consolidation.
Hi, good morning, Mangalam, Nigel. Thank you for having me on the show. Yes, definitely. I think mid-caps and small caps are certainly performing or holding the rather broader markets as we speak. Nifty also is holding on to its support on a closing basis, 24,400, 24,350. That range is quite critical. It is holding that support on closing basis. For as long as it's defending that, you can see a consolidation in Nifty as well. On the higher side, 24,600, 650 can act as a resistance. So it's mostly like to consolidate in this range for the next 2 to 3 days where the rollovers take over Nifty. I think Bank Nifty is a bit of a worry over here because Bank Nifty has closed below 52,000 yesterday. It broke that crucial support and Bank Nifty is not able to take out the resistance above 52,000 on today's weekly expiry. So anyway, Bank Nifty may continue to drag the broader market or the indices lower. If it's breaking 51,000, you can even see levels of 50,000 in Bank Nifty. Perhaps it can happen for the other series. To negate this view, Bank Nifty has to take out and close above 52,000 today and tomorrow. Then only, the view can get negated and it can hold on to its support as of now. But for now, I think it's better to stick to stock-specific strategies with good breakouts and good volume option. When it comes to indices, it's better just to hedge the positions and stay light.
Okay, all right. Thanks for that, Sony. What about individual stocks? What are you looking at?
The first would be in IGL, which is seeing a good range breakout today with good long built-up positions and also good rollovers. The July to August series on a longer side. So in August series, one can buy IGL futures, keeping a stop loss of 540 and a target of 562, 565 can be seen. The second stock pick is from the pharma space, PEL, which is also looking for a good range breakout. It's consolidating right now, but above 950, you can see that breakout coming in PEL. So one can buy at current levels, keep a stop loss of 920 and a target of 980. Above that, 1,000 targets can be seen for August series.
All right, take that point. Do you have a view on any of these cash stocks which are doing extremely well? Case in point, something like a BSE. We are seeing some traction in LIC as well. Anthony Waste Handling, as we spoke about earlier. Are you looking at any of them?
Definitely, Mangalam. I have been noticing LIC, which is looking quite strong even as we speak. And, the stock has given a fresh breakout and above 1100, it has crossed these levels. So anywhere towards 1160, 1180, it can test. If somebody has already bought it at lower levels, it's wise to just trail the stop loss to 1060, which is its very crucial support. Hold for higher targets of 1180. Even if it's able to sustain above 1180, these targets can get extended to 1230. So on charts, it has given a very fresh breakout and looks quite strong to hold.
All right. Thank you, Soni, for joining in. With that, we'll slip into a short break. Come back on the other side. We'll have the management of Indian Overseas Bank. Ajay Kumar Srivastava, who's the Managing Director and CEO, joins in to discuss the quarter gone by. Welcome back. You're watching us here on Chartbusters. One of the stocks which is busting charts this morning has been United Spirits. It's a big mover. In fact, it's a fresh record high that we're seeing on the stock, up around 5%, upwards of that 1400 mark on the stock price as well. And that's largely because of a strong operational performance coming in. Premiumization, cost control, and at the same time, better realizations for them has actually aided their performance. So revenues coming at 2,350 crores against CNBC-TV18 poll of 2,330 crores as well, largely in line. But it was the EBITDA which was higher by almost 60 crores as compared to the poll. EBITDA came in at around 458 crores. The street was working with a number of around 400 crores. And we have the margins which are at a multi-quarter high at 19.5%. This compares with 17.3%. These are standalone margins. Remember, the first quarter margins on a consolidated basis are reportedly a lot higher because of the IPL business as well. So core margins at 19.5% are much higher than what we've seen in at least the last 12 or 13 quarters. Profit after tax, again, closer to 300 crores versus street expectations of 238 crores. What did well for them? The prestige and above business actually saw a revenue growth of nearly 11% versus street expectations of 8 to 9%. And remember, this was a quarter which was marked by a fair amount of election-related disruption as well. And in that, the volumes grew by about 5.1%. Popular, a business which they decided to, degrow or curtail, has actually seen a decline of about 2.4% in value and about 4.6% in volumes, largely expected. And they've also gone ahead and made 2 acquisitions. And that's an interesting one because over the last couple of years, they've gone ahead and bought a lot of these artisanal brands. And this one, again, is an investment, a 15% stake in V9 Beverages. V9 Beverages, Nigel, makes distilled non-alcoholic beverages under this brand called Sober. And the other company that they've bought is 25% stake in this company called Coffeen, which they've put 5 crore rupees. What is it that they make? Specialty cold brew coffee liqueur. Both of them do revenues of about 50 lakh rupees as of last year. But then again, with United Spirits distribution and their might ahead, maybe they can scale it. But interesting foray there.
Well, that's right, Mangalam. Budget, no budget, good times, not good times.
Everyone's going for a bit of
a large one, I think.
Whether you go in for a large one, you go in for a small one, you got to protect yourself, and that's exactly where the next stock on our radar comes in from. ICICI Prudential Life. Also, quarterly results coming in. The stock among the top F&O gainers. Yash joins in with the fine print. Yash, what's ensuring one's life?
Well, for ICICI Prudential Life Insurance in the first quarter, there were some hits, some misses, but the market clearly acknowledging how the hits were much stronger than those few misses which came in the first quarter fine print. If I just have to look at, what CNBC poll had suggested, the new business premium which the company collected had come in line. Total APE was a miss and VNB was a miss, but the market, acknowledged the fact that retail APE, which is more margin accretive, was a strong beat when it came to CNBC-TV18 poll, and the margins importantly came in line. If you have to look at the year-on-year numbers, the new business premium grew at a healthy pace of 24%. Total annualized premium equivalent or APE grew at 34%. Retail APE, the one which came at a strong beat, grew at 57% in the first quarter. VNB grew at 8%. And finally, the margins, they grew. They were at 24.04% versus 30%. Now, it's been an industry where margins have been taking a strong beating downwards because of the strong ULIP sales which have come about because of the buoyancy in the capital markets. But ICICI Prudential Life could maintain their margins to what the street was anticipating, and the street is liking that fact. The stock hasn't done much as compared to some of its peers in the sector. It's up 13% in the last 1 year, 12% in the last 3 months. It's just about 52-week high at 674, marching towards that point. Trades at about 1.9 times price to embedded value, not the most expensive one in the particular life insurance sector, and that is giving some valuation comfort as well.
Okay, thanks a lot for that, Yash. So ICICI Prudential and United Spirits, both of them doing pretty well in today's trading session. An hour or so ago, all the real estate stocks are doing well, barring DLF. And now that one as well has recovered from the low point of the day. If I'm not mistaken, it was down 1.5%. Now it's up 1.5%. So in the last 30 minutes or so, DLF, after starting off in the red, that's pulled back considerably. On the flip side, take a look at India Cements. That stock has suddenly moved to the low point of the day. So, there's been that excitement that maybe there could be a battle between two large names for this particular asset, or maybe Ultratech Cement goes the entire hog and pulls up, and their open offer. But for the time being, that stock is under some pressure. And V-Mart as well, the other big mover in this month. Well, that's come in for some profit taking, moving to the low point of the day. Well, time to slip into a short break. On the other side, we'll try to get chatting with the management of Indian Overseas Bank. Stay with us. Welcome back. Well, as promised, let's get chatting with the management of Indian Overseas Bank. We have with us Mr. Ajay Kumar Srivastava, who's the MD and CEO of the company. Hi, Mr. Srivastava. Good morning, and thanks a lot for joining in. Well, I want to focus first on the deposits. There appears to be a bit of a slowdown out there in the system on the whole. And in fact, deposits in the system are declining. What kind of deposit growth are you looking at?
Yeah, the entire industry is grappling with deposit growth, and the same is true for IOB also. We are looking at around 10 to 11% of deposit growth in this financial year. And if you look at the Q1 figure, we have grown by around 4% in Q1. And yes, please.
Yeah, so 10 to 11% deposit growth in this year when, the deposit growth in the entire system is declining. I just wanted a couple of thoughts. One is that what is your cost of deposits likely to be for you to be able to grow deposits by about 10 to 11%? How much is that likely to increase by? And if that were to increase, what happens to your NIMs?
Yeah, cost of deposit as of today 4.95 for June quarter. We intend to keep it around 5, maybe plus 5 also, around 1 or 2 bips above 5, because that is the situation in which we are in. Having said that, the deposit growth which we are targeting of 10 to 11%, we have a plan already in place. A special retail term deposit of 444 days we started almost 20 months back. We envisaged and we imagined that there is going to be a scarcity of deposit growth, and accordingly we formulated plans and started implementing it almost 20 months back. And in that 444 days bucket which we started 20 months back, we have already garnered around 45,000 crores over last 18 months. And in the month of February this year, we increased that rate of interest to 7.30, which happens to be the best in the system. And for 1 year in our recently concluded ALCO, we made it 7.10. So that part is taken care of, that is retail term deposit. And for CASA, if you see, year on year, we have grown by almost 10%. And in Q1 also, we have been able to maintain the amount. Amount-wise, it can be termed as flat, but we have not gone down as compared to the industry. So plans are in place, and for CASA, last year, onboarding of customers was the priority. We onboarded amount around 2.5 million, around 25
No,
lakh.
we get that. We get that you are putting plans in place to increase your deposit, but the question is what happens to your margins with increased cost of deposits? 4.95% you said can go upwards to 5%. You're giving interest worth nearly 7% as of February when you restructured that. So what happens to your NIMs? Because in this quarter itself, it saw a big decline both year on year and quarter on quarter. What is the range that one should work with?
Yeah, the decline has been because of one special entry in Q4 of last year. Because of that, the decline is visible. But having said that, the cost of deposit will be compensated by the pricing which we are going to give to our borrowers for further lending. And the range of sub 8 or around 7% lending, that has gone by. We are very, very particular that what pricing we are going to do as far as lending is concerned. So whatever additional cost we are going to incur by increasing deposit rate, we are going to compensate by interest income and other non-interest income also. And accordingly, we are looking at to maintain NIM at around 3.10 for this year.
All right, 3.10. Got that, Mr. Srivastava. A couple of quick questions then. You're saying the deposit will grow by 10 to 11%, but in the first quarter, it's only 4%. You're confident that you can grow at 12%, right? From year on, because that's the asking rate.
Exactly. Anywhere between 10 to 11, yes.
Got it. And you also said that the cost of deposit will go up, but you'll offset that by getting your loans priced at a better rate. So
and
that
increase
brings me...
in CASA.
What is it?
Increase in CASA, low cost.
Increase in CASA, correct. Now, if your yields that you're offering to your customers go up, what kind of loan growth are you looking at? Don't you think it'll be a bit of a dampener as well?
There is huge demand. That is what I can say. Credit demand is there in all sectors, right from retail or MSME or even corporate sector also, demand is there. And there is not enough money in the market. So borrowers are also tuned to this fact that a little bit of higher pricing they have to bear with. That is one part. And accordingly, the credit growth also we are looking at around 10 to 11 and 12% only. This year, the plan of the bank is, of the management is that we will try to grow deposit more than credit growth. That is the plan for this year.
And what's the loan growth target for this year?
Around 12%.
All right,
12%. All right, let's talk about your asset quality then. Could you tell us what kind of recoveries are you factoring in the IBC NCLT cases in FY25?
Yes, recovery, I will take both slippages also. First, I will take 10 seconds about conveying about the slippages. So if you look at Q1 figures, our slippage ratio is only 0.13. We have slipped only 277 crores, and last over 15 to 18 months, the slippage in corporate sector has been nil. Not even a single corporate account has slipped. This shows about the type of credit underwriting we are doing and the level of monitoring efficiency that has come into the system. Last year, for the full year, the slippage was only 1,487. Slippage ratio was 0.87 for last year. This year it is 0.13. That is one part of asset quality. The second part comes of recovery. This quarter we have recovered 582 crores. Going forward, the exact, I will say, amount-wise, that NCLT and non-NCLT, how much we are going to do, it's difficult at this moment. But having said that, we are targeting 5,500 crores worth of recovery, and one of the great sources of recovery is going to be ARC sale. We are very bullish on that. In the month of April itself, in this financial year, we started ARC sale. 13,000 crores of assets we put on block. And due diligence by many ARCs is going to happen. So we are pretty confident that overall, by the year end, we will be able to recover more than 5,500 crores of bad assets recovery.
All right, that's a tall target, 5,500 crores. And finally, before we let you go, if you could give us a sense of what your credit costs for this year would be, along with GNPA and net non-performing assets?
Credit cost for Q1 was 0.29. We will try to keep it around 0.75 to 0.80, less than 1, of course. And GNPA, we are at 2.90. We intend to bring down by another at least 40 bips in this financial year, maybe around 2.40 to 2.50. Net NPA, we are at 0.51. We are already, I will say that net NPA ratio is one of the best. But still, the year-end budget is around 0.25 to 0.30.
Got it. All right, Mr. Srivastava, always good speaking to you. Thanks a lot for joining in. You've given us a good outlook in terms of your numbers, and we'll hold you to them in your next quarterly update as well. Wishing you a good day and a good quarter ahead. For the time being, the stock holding with a gain of around 1.5%. Well, on that note, we'll wrap up on this edition of Chartbusters. You stay with us, though. Trading Hour comes up next.